Are you struggling to understand the VAT schemes available to small businesses? Well, let me explain the two main schemes that Clearways Accountants use for their small business clients, the VAT flat rate scheme and the VAT cash accounting. If you watch this tutorial, you'll be in a position to calculate your own VAT return and submit it to HMRC. To my mind, the most important VAT schemes for small businesses are the flat rate scheme and the cash accounting. There are other schemes, but this tutorial won't cover those. So turning to the first, which is the flat rate scheme, what I propose to do is talk you through how the calculation is made. And this will also demonstrate potentially where the benefits of the scheme lie. So I've prepared a spreadsheet and put some invoice numbers in for you. And as you can see, I've got the amount excluding VAT, the VAT and the amount including VAT. And the way the flat rate scheme calculation works is you take your VAT inclusive invoice total for your quarter and you multiply it by your flat rate percentage. The flat rate percentages are set out in the revenue guidance and are based around different business sectors. So, for instance, plumbers and electricians will have a flat rate percentage that's much lower than someone who operates as a management consultant. So because most of my clients on the flat rate scheme are contractors, we're going to use the management consultancy rate of 14.5% for this example. So here we are looking at the numbers for Gardenia Grove Limited, or GG Limited for short, and we can see that they've issued 2 invoices in this quarter, and the VAT inclusive amount is £31,440. Their flat rate percentage will be 14.5%. And so in terms of their VAT return, they will multiply the VAT inclusive total of £31,440 by their flat rate percentage 14.5%. That's the amount that you would include in your VAT return. You would include the £4,558.80 as your sales VAT, and you would include £31,440 as your sales amount. And that's it as far as your VAT return is concerned, unless you know you've incurred some expenditure on capital items exceeding £2,000. Starting from the 1st of April 2017 is a new test that the Chancellor has introduced, and it's called Limited Cost Trader. And this will apply to everybody on the flat rate scheme. And basically what it says is you have to calculate your spending on relevant goods. Goods excludes services. So for instance, things like mobile costs and accountants' fees cannot be included. It also specifically excludes road fuel, motor parts, food and drink. In order to apply this test for the quarter, if that's your VAT period, you have to calculate the amount spent on goods for the quarter. If this is less than £250 in the quarter, or less than 2% of the VAT inclusive sales, then you must use a 16.5% flat rate percentage in your calculation. So what that means is, instead of using 14.5%, which is our normal consultancy rate, you would have to use 16.5%. And you can see from the numbers that under this amount, you've recovered £5,240 from your customers on the invoices you issued, and you will be paying £5,187.60 over to HMRC under the scheme. So for most businesses, this will not be the most appropriate scheme to use as a small business if you are in consultancy, accountancy, bookkeeping or law. In which case you might want to think about using the cash scheme. Here we are again looking at the same figures for Gardenia Grove Limited. You can see the income excluding VAT, VAT and the amount including VAT are the same as the previous example. But now we're looking at the cash scheme. So what we've also included is an expenditure sheet. And this is, in this case, it's the bank details for this company for the month of May 2020. And what we've done, because it's a cash scheme, the VAT is calculated based on cash in and cash out. So in this case, we've gone through and where the items have included VAT, we've added an extra couple of columns to the bank data. And this gives us our total purchase VAT and sales VAT. And these will be the numbers that you'll be reporting on your tax return when you complete it. In addition to the amount being reported as sales will be your net sales and paid purchases will be your net purchases. And this scheme is great because it's really easy to operate. You can do it all from your company bank statement or your business bank statements. And you get automatic bad debt relief if your customers don't pay. So literally, when you've received the money, you pay the VAT over. And this is the other scheme that I recommend to small businesses. And this will, in the main, be the scheme I recommend to my contractor clients. I hope this tutorial has demystified completing your VAT return using either the VAT flat rate scheme or the cash accounting scheme. I'm Liz at Clearways Accountants. Thank you for watching.